Okay, so officially, good afternoon, everyone. Hope you're all doing well. Hope you've had a brilliant weekend away from the charts. Not sure if you're actually physically away from your homes or whatever, but I hope you had a good weekend nevertheless. I, for one, had way too many drinks on Friday and spent my weekend hanging from a thread. I felt, I haven't drank for quite a long time. I don't really drink too much, obviously, especially as I've gotten older, because my diabetes is just too much of a pain in the ass to deal with the next couple of days. But we did decide to take it to the next level and really let our hair down on Friday night. And my God, it was disgusting. The Saturday and Sunday were complete and utter write-offs. And basically got through like we've so I imagine you guys have all heard of Lost, right? The TV show. It's arguably like one of the founding fathers of the sort of TV show binge watching things that people went through. Except obviously when it was made, I was about 11 years old. So back then I saw the occasional episode and stuff. Watched a couple of seasons as I got older later in life. But to put that in perspective, there were 6 seasons that were released over the course of like 8 years for Lost. And we watched, honestly, genuinely about 3.5 seasons of it in the space of 3 days. Or 2.5 days. So yeah, it was it was hilarious. I mean, we just smashed through loads of it. And don't give me any spoilers, by the way, if you have seen it all, because I haven't actually seen it right to the very end myself, so don't want any spoilers. But yeah, just ridiculous how hungover we were. But it was a really good laugh. Me and Lucy haven't let our hair down for a while, so it was good to just be silly. And we didn't have any kids this weekend either, so that was all right. Yeah, it was good. It was a laugh. Good afternoon, James. Good afternoon, Nadia. Good to see you guys. Lovely busy turnout today. God, we've got Braden in the room as well. Good evening to you, Braden. Bloody hell, we got loads of people here. That's good. Good to see. Honestly, at this stage, that's pretty much what's happened, TJ. Yeah, in a nutshell. Right, so what are we looking at this week then? Let's have a quick look at the economic calendar just to get us going. So we've got a semi-interesting week in terms of the fundamental catalyst this week. We don't have sort of major events on every day, but it is the inflation week, for the United States. We do have core inflation and normal base inflation rate for the per month and annual as well. So that's coming out on Wednesday. Obviously, we don't have anything going on today. Even, to be honest, even tomorrow is relatively quiet as well, in terms of the data that we're going to be looking at in our trading hours. We've got some Australian data, Westpac consumer confidence change in the NAB, business confidence sentiment is out at around, well, as you can see here, 130 to 230 overnight. We've got balance of trade as well. Australia is a really big one to watch at the moment, guys, economically speaking. So it's good to keep a sort of broad view on top of what's going on there. I will keep you guys sort of up to date on what the picture is looking like in what's developing over there as in when's needed. But it is a big one at the moment, really, really big one. We've got the United Kingdom coming out at 7 a.m. with unemployment change. It's honestly looking at it like it's not even going to be much of a change, to be honest. 4.1 analyst expectation. I don't expect that to change even. By that, it could be a 4.2 again. It might be a 4.1. I don't think it's going to be too much of a big beat or miss. There's no major risks to that data, and I don't think the markets are going to nudge a single notch as a result of it. Then moving on into Wednesday, of course, we have the big elephant of the day, which is the US inflation. The analyst expectations, I mean, they've gone really creative with their forecast this week. Basically, not looking for a change anywhere apart from the inflation rate annual, which is 2.6, decline from 2.9. If that is a 2.6% print, or lower, that's going to be very, very bullish, I think, on stock markets. Very, very bullish. If that reading comes down. Look, the monthly data, if there's a significant change per month, generally you'll get a bit of a nudge in the markets for sure. You'll get a bit of a volatility strike. But it doesn't really have any lasting effects. The inflation rate yearly data is the big one. Core inflation as well, of course, the annual data on that one, if we get like a 2.9, for example, that would be very bullish. If it's 3.1, don't think it's going to make any difference at all. If it's 3.3, a 0.1% tick over, you may indeed see some kind of difference there. In the markets, you may see some significant volatility from that if it's a rise, but not if it's just a notch lower. The inflation rate, however, annual data with a 0.3% decline there, that's a big one. That is actually worth giving some sort of credence to. So interesting to see how Wednesday pans out. We will be on a little bit early. I'll be popping on 15 minutes earlier for that one, so you can write that down or whatever you need to do. I'll put a note on the events calendar as well, just to change the time on that one, just 15 minutes early, so that we can look to trade it live, as I usually like to have a stab at these events like that. And maybe try and get the corrective if we miss the initial move lower or higher, whichever one it comes out with. So moving into Thursday, we then have the ECB rate decision. We have obviously has the press conference, called it 2 in the afternoon. Happy to stream that one live as well. We can have a look at what the ECB's up to at the moment. I know, generally speaking, from a trader's perspective, it can be a bit dry. But I think it's just important to maybe catch at least some of the questions, just to see if there's any sort of further heads up on rate policy forecasts, expectations from the ECB themselves, what Christine Lagarde's saying to some of the questions that the press actually ask, because the press, they are generally not afraid to ask the direct questions. Obviously, we have to go through the rigmarole of listening to the central bankers do their political part and try and dodge and weave questions coming through the doors thick and fast. But sometimes you do get nuggets of information. I believe on the last one we had from them, there was actually a bit of a piece of information that was worth finding. So I think we'll sit down to do that one again. Obviously, that's 1:45 in the afternoon. 1:15 is the actual rate decision itself. We are looking at a 25 basis point cut for that one, as you can see. I think that's pretty much priced in as well, guys. I don't think there's going to be any reason not to expect that at this rate. But it's going to be really interesting to see if there's another 25 basis point cut in the next one and what they're looking at, even though we know the answer is probably going to be, well, we remain dynamic and adaptive and we listen to the data, and the data says that we need to cut, and blah, blah, blah. But it would be really good to see what they're saying about the rest of their data coming out at the moment, which is cooling off big time. It does lend itself to the understanding that we will see consistent 25 basis point cuts in the coming months. So it would be nice to get a bit of clarification around those points and maybe build that into some forecasting of our European pairs and the assets that we're looking to trade. We also have the PPI, monthly PPI data for the United States. That's at 1:30 on the Thursday as well. Probably will be on at 1:30, the normal time on Thursday. So I won't exactly change the event itself for that one. We'll come on, look at the PPI, see what the market impact is based on the 0.1% forecast, and then we'll go into the ECB press conference in the next 15-minute window and go from there with that one. And maybe we can duck out, maybe, I don't know, 20 minutes later, take it up to 2:05 or something, duck out, have a look at the US stock market, get our market preparation done, then maybe tinker back to the press conference if it's worth it for the final 10 minutes, or just duck out from there. We'll play that one by ear. Excuse me. And then, of course, on Friday, we've got Michigan consumer sentiment, and that's pretty much where we close off the week. The consumer sentiment panel is actually looking like it's rising. I mean, we've got a 68 there from a 67.9, so a notch up. Not that that's going to mean too much to you guys at all, but that is what we've got to deal with on the Friday. So that pretty much sums it up there for the economic view of what's going on. So today, completely clear day of trading. Tuesday, pretty clear down clear day of trading. Nothing major to really watch out for at all. So nothing to worry about until Wednesday. Wednesday morning, all we've got is the GDP monthly data for the United Kingdom, and there's nothing much else to say about this one. Looks very, very stable at the moment. Don't expect any major surprises from that one. The inflation for the United States is honestly the key sort of metric of the week. This is the one that you really, really want to be keeping an eye on. So it's not really the monthly. You want to be keeping the eyes on the print for the inflation rate annual for core and the non-core base annual rate as well. These are the two that we really, really want to be keeping our eye on to see the continuation of the trend lower. If we get a rise, if it remains the same, that's signs of stickiness. We don't like that. That's going to be bad. That's going to be pretty dovish news for assets like the stock market, for example, who are naturally going to accelerate and thrive in a low interest economy. So yeah, we really want to be keeping our eyes peeled on this one and this one, those two. So yeah, we'll go from there. So let's have a look at the markets themselves then. The European session this morning, to be honest, was a bit of a washout. Did send a couple sort of maybe example trade ideas. Not really been active in the markets myself at all today. Just kind of letting the dust settle from last week and seeing where seeing where things lie. The Euro Stoxx 50 index, for example, here we've got a little bit of an M reversal going on at the moment. We've got liquidity sort of here rising up there. We had a M reversal. We've come back down. There's no real clear trading opportunities. The bottom line is we're still in very bearish market territory. Major inflection point down here, W reversal. Are we going to come back down there again? I mean, it's a fair distance down. We certainly could do. We've got another sort of relatively large area of liquidity which runs straight through here. We've got the highs here, breakout, retest, then continuation, come back down. We've now bounced major inflection point in this current wave. We've come down to this area, bounced really quite nicely back, maybe a 65% pullback, for example. I think a decent trade idea, still the same as the one I posted out, would be for a break of structure underneath here, down to those lows around 47.20 to take the margin between these two areas. The only issue I see here is the fact of the time of day. Euro Stoxx 50 is now out of it. I'm not interested in it anymore. It's 1:45 in the afternoon. So hopefully we're going to see some ranging price action for a while, and then overnight, and then in the morning we'll be able to take the same trade. Highly unlikely, but as always, not completely impossible. Looking at the DAX at the moment here as well, a couple of preliminary trade ideas you guys could have potentially looked at this morning. Had that same M reversal thing here. Potentially had a trigger here. It's kind of just ground its way sideways, not really done anything. We do have a breakout. Looks like it could be going for a successful retest of liquidity here. Maybe not. As I say that, starting to rally again. But again, completely wrong time of day. We want to be done and dusted with this at 9 a.m. time, 8 to 10 o'clock being the absolute latest for something like this. And it's just at the time of day now, so it's just going to be a time to pack it up and move on, wait until tomorrow. But yeah, a bit of a washout of the European session, like I said this morning. Looking at the US stock markets, we've had similar motions of price action as we have done with the European session. It's just not been too, what would I say, exasperated. Like if we look at the DAX move and the Euro Stoxx 50 moves, these are quite exasperated, these moves, exaggerated? Yeah, one of those words. Whereas the US markets with the US tech stocks here has been the same, but very small. It's like been a sort of miniature version. The US 30 Dow Jones, in fact, didn't even get the same kind of pattern. It's just continued to trend higher. So based on where we are at the moment, this is from last week's trading, guys, so just ignore all this. So based on where we are at the moment then, major inflection points on the 15-minute time frame with the Dow Jones. Well, we're certainly going to be looking at this area in here as one of the major inflection points. And we would probably suggest that this one up here is also one of the major inflection points, with a median being at around this area in here. Now, it doesn't necessarily need to be the same width, so you can thin that up a little bit. And there your trading margin. So you'd be looking short underneath here, you'd be looking long above. Now, this one does make sense, and because of where it's trading at the moment, it's certainly not a bad choice. Now, you do have an area of liquidity, which would formulate its own median of this area in here. So, for example, we would draw the zone through this area, and that would be our liquidity zone to keep an eye on. As we can see here, the market does react to this area. It doesn't ultimately change the sort of true trajectory of the market, but it does have some gravity. It does have some weight to it. If we go down to a 1 minute time frame, now we've built the 15-minute chart, you can see that, to be honest, the margin of trade between A and B is absolutely fine. It's pretty damn good. Now, if we go back in time and we look at what's happened here, for example, here, all the way back, this area, we have failed what this sort of cluster, I don't know if you would count that as 1 or 2, probably 2. So 1, 2, 3, and that's it. We do have that one up there. That's not really the same one though. So we have 3 failures versus the 1, 2, 3, 4, 5, the 5 winners. This one's a bit of an outlier, isn't it? This spike back here, that's fundamentally driven 4 in the evening. So that's got to be some kind of news looking at that move there from last week. But I would be pretty confident in taking a trade between these two margins here. So my plan for today for the Dow Jones, based on where it's trading at the moment, is going to be a break of structure of this area, which is quite far into the move, but it does allow some decent risk reward. So let's just thin that up a little bit. We've got this area here, and we've also got this one in here. So 2 nice levels of liquidity. And what I'll be doing is looking for the break of structure trade outside of these areas. Nice big target profit up there, and a stop loss at about this area here. Now that is actually quite a big trade. Even with all of the fine tuning and the cutting down and everything that I've done here, that's still quite a large trade. But I'm going to be okay with that one today. Best thing about it is we do have 2 points of liquidity inside the stop loss. It's still going to yield a 1 to 2.3. So we're looking at a 0.56 return, which is great. Great way to start the day. So that's going to be the trade idea with the inclusion of these two zones inside that stop loss to protect us from a possible turning point there. When it comes to the NAS 100, it's more of an unfortunate place where it's trading at the moment. We do have a nice margin of trade, don't get me wrong, but we're not at the beginning of it or the end of it. So the thing about the US 30 Dow Jones, look, we've got to break close and a retest liquidity. If we break out above this area, that to me, that looks like a clear winner. It really does. It's a fantastic trade as far as I'm concerned. The NAS 100 is not. We're trading right bang in the middle of 2 trading margins, so it just doesn't feel right. It doesn't sit right. I want to be going long from down here, or I want to be going short from up here. So that can still be a plan. If the market comes down, pushes into liquidity, then rejects, then we can go long upon the rejection back up to this level at 1866. That's not a problem at all. But as it stands right now, we're trading directly in the middle of dead space, and I'm not interested. The US 30 Dow Jones, there is short opportunity, but the unfortunate thing is you're going to have to wait a while. There's a big space between where we are at the moment and the break of structure for the short. The BOS from the short is going to be upon a lower low of here when it breaks through this anchor point. So when we break through this anchor point, we'll then be looking to take the market right the way down to 40.32. Now these are some pretty big moves, team, for a Monday. So they are giving me a little bit of cold feet just considering them. I mean, the risk reward profile on that one's a 1 to 2.5-ish. Based on the exact entry and stop loss that I've sort of articulated here. We have a technical risk factor, which is probably going to be somewhere like there, for example. And And that's going to be a short trade, but make no mistake, this is a 1 minute trade, 100%. That's an intraday trade. So you'll be looking to hold on to that one maybe for a few hours at least, I would say, until it's complete. And especially on a Monday when we have historic lack of trading volume, it just doesn't fill me with the utmost confidence. But I try to provide neutral bias in these stock markets. Trade ideas for both sides of the markets. That's exactly how I trade. That's exactly how we trade. So that's what's done. But I would say the short definitely looks. It looks high risk than the long. That's for sure. In terms of the NAS 100, there's no trading opportunity to be had whatsoever at this stage. I would simply be looking to either go short from 1866 down to the low or long from 1848 up to the high. If it just powers up and then we get a break close and retest on top of 1868 or 69 to be exact, actually. 69's the one to go for. So BCR of this area, then we can look at the long back up to this area, 1885. And that is also kind of on the cards, possibly. I mean, this is the level I used last time. Looking at this, I would probably today, in fact, drag that level down. Yeah. And then look at the BCR. You'll be able to see this on a 1 minute time frame anyway. So nice, clear breakout, retest, and then the continuation. So it wouldn't be no on a 1 minute time frame if you're still in the process, you can't articulate things on a 1 minute chart very clearly. They happen on a 15. You're probably looking at something like that. So the market comes right up, then it comes right back down again, and then continues. That's what a 15-minute BCR would look like of this area, but on a 1 minute time frame. So clean breakout, then 10-15 minutes back down, hit liquidity, 10-15 minutes up to break structure, and bombs away. You're in the trade. So that's the kind of thing that you'd be looking for up above that area. So then structural break, entry, target profit, stop loss, probably for me going to be at the the roof of this area here. You're looking at a 1 to 2.8 there. I mean, that's pretty damn good. That's a really good return. But again, is the market going to be rallying from there on a Monday? That's the question. Because where we are at the moment is here. And we're going to be looking right up there. That's 1.2% on top of 1.3%. The NAS 100's already gained today. Okay, look at this down here. You cannot ignore that. That's big gains for a Monday, 1.3%. So not hugely likely. Yeah, no worries, James. Michael, today could be like last Wednesday after the big move. Sorry, guys, swigging down a drink. I mean, think about what Mondays are like, right? Mondays generally are like that. That's exactly what they do on a Monday, because the huge financial engines are just warming up and they're just starting to turn. Sometimes on a Monday it's okay, but most of the time, probably not. All right, so we're basically at 2 o'clock now, so we'll work our way through. This is a potential short in Brent that was pinged out. This one would have been an instantaneous stop loss trade. We did get the breaker structure below this one. We've come back instantaneously, and it looks like we're going for a second attempt on this one. No idea what. Yeah, well, I mean, it still looks the same. It still looks like a pretty decent trade. To be honest, there's nothing that's really making me second guess things. The only thing is we've not stuck to the original floor here. We've actually come down to this area now, haven't we? Because that's the point in which it came down to. And it didn't stick to the rebound, retest, and then break a structure. It actually came down to this miniature one and reversed from there. So then your entry would now be sub that, and your stop loss would be right the way down there. So I mean, it's the same trade, guys. You're not losing, you're not missing out on anything here by taking it down there. The only thing is that you're doing is removing some of your market exposure time, really. That's not a bad thing. That's not a bad thing. So yeah, that's your trade, isn't it? So yeah, I like that. Yeah, it still looks good to me. Looking at gold. So got a clean breaker structure. Coming back down for a retest of it now. Well, I suppose all intents, but I mean, it's just going to be right bang in the middle, isn't it? Yeah, so for example, if I pulled the median across from there, that's just a clean rejection of the median. Yeah, I mean, we've hit the top there, didn't we, from the NFP. We fell all the way down to 2484 as soon as we hit this sell side area, which was articulated on Friday. So really, I want to see the market come all the way down here before I consider going long. So no trade idea in gold at the moment, I'm afraid. What else are we looking at? Aussie CAD. Got a really nice break close retest. I mean, that could trade way lower at the moment, or we could come back up to retest this newly formed floor here. This is disgusting. What's this? Oh, it's weak. Okay, right. Okay, that's the weekend close. That's why that's there. And then we've opened up, powered up, hit liquidity, then gone on our continued way down to the lows. Not really sure about the Aussie CAD at the moment, guys. I don't think that's found its feet enough for me yet. Aussie yen. Yeah, I think this has got some legs. So got a little bit of an M reversal going on here at the moment. I think if we break structure below this area, then a short down to 94.80 could certainly be on the cards. And then below there as well, quite honestly. I mean, if we went to 94.20, that'd be great as well, wouldn't it? I mean, this is only a 30 pip trade, but it's a solid distance to have a go at. So yes, I'm going to say yes to this. Yeah. And then that would come back up from this area, retest the midpoint of the M reversal, and then we could even be looking at a secondary trade underneath here for an even greater risk reward ratio. Yeah, so we could get maybe 0.56 back on that one, and then a 6 on this. Anyway, let's not think too far ahead at the moment. Don't worry about putting this in the pendings. This one, however, is nice. I like that trade idea. That looks all right. 95.15 entry, 94.865. Target 95.30 stop. Yeah, that'll do. Right. Okay, Aussie NZD. This is from last week, by the way, guys. So just don't worry about anything like that. So Aussie NZD. What are we looking at here? Okay, double bottom, major inflection point down at the lows. That's good to see. Refueled at the station. The only bloody problem is we weren't there in time. It's at 3:30 in the morning, my time, and most of your guys' time. So unfortunately, not much to be said about it. Because it's trading right bang in the middle, isn't it? These 2 points. Really, really nice movement down here, though. Great breaker structure. Lots of money in the market here. But unfortunately, team, yeah, it's just a no-go for us, isn't it? We don't want to be bottom feeders. You know, a lot of bottom feeding trading. Lot and bottom feeder trading in the middle. Smart money's outside here. Ugh, smart money. Dirty term. But yeah, that's where it is. So we'll have to sit tight. Let that one come. We'll see where we are tomorrow. Aussie dollar. That one's done quite well as well, hasn't it? Yeah, unfortunately, just looking at these timings though, aren't we? It's by the time we're sort of at our charts, ready to trade, we're talking about 7 o'clock. You would have had to have been up very early to capture that one. Because that was resting up there, ready for the breakout at around 5 o'clock this morning. Maybe even a little bit earlier, 4:30. It's a little bit of a shame. Really beautiful price action though, to be honest. Perfect retest continuation. This is very similar to the Aussie yen. No. Aussie CAD. Yeah. Very, very similar to the Aussie CAD. And unfortunately, guys, not really too much to say about it. Again, it's a very difficult place. It would be nice just to say, okay, yeah, let's go long some of these Aussie pairs. But the problem is we've got this point in here as well. That's your breaker structure for your entry. Aussie CAD, very similar. Breaker structure entry going to be here. Aussie CAD's got that floor directly above. I guess this is the floor for the Aussie dollar, isn't it? But the thing is, you got the roof then, because this one's just a little bit more sort of set down. So I just don't think it's got the margin in there without the risk. So I'm going to have to leave that one as well. CAD Swiss, no. CAD Yen. Yeah, no. Definitely got this area in here to contend with, which means the trading margin is going to be between here and there. And this is a descending level more than anything. So a CAD yen short. We are going to be doubling up on our bullish yen, aren't we? I think that's not a bad trade though, that little one in there, is it? What is that? So we've got this area in here. That's where we're going to be a 1-to-1. A 1-to-2, sorry, yeah. That's the top of the zone. So top of the zone is going to be about there. 1 to 1.8. Yeah. So that's going to be a 1 to 1.8. I don't know. I don't think I'm going to go for that one either, team, actually. No, not yet. I want some more indication there. Euro against the Aussie. Let's have a look at the daily. Okay, very, very, very cash-rich area. Up and around these highs. Lots and lots of highs up here. So, it is a potentially good place to go short. We've got the next area down, which is going to be here. And that's going to be the low. So then 15-minute time frame again. Yeah, because then we get the break close retest and then the continuation. Okay, that makes sense. Right, okay, so we've got our trading margin. We've worked that out. We've got the medium. Okay, I don't even need to articulate this stuff to you. Just look at 50% point, those two zones. Right, got the clear median right bang in the middle. Breaker structure for this one is going to be here. So that's where you're going to look to enter. And moving away from big liquidity. So then entry. Target profit. I think your TP for this, I'm going to go right down to the bottom here. Look at that, for example. Yeah, all those lows along there. So I think you've got an ascending level as well. Might be worth putting in the chart, possibly. We don't know for sure yet. That one there. That one comes up on there. Right, so really nice sort of split side trip wire here. reacts to it very nicely on the bottom of it, reacts to it very nicely on the top of it. Yeah, really nice. So it'd be good to clear that out of the way as well. Luckily for us, our breaker structure point is going to clear out that area anyway. So entry is going to remain at 165.60. Stop loss for this trade idea, the 50% point between these two zones, is going to be a 1 to 4. I mean, yeah, that's a little bit too good for me. I don't like to be too good. So I'm going to say a 1 to 3.5. Give that a little bit more room to breathe. A 1 to 3.5. We also get the long breaker structure inside the stop loss. So we get the big one and we get the little one for the price of 0.5 of our return. So I think at a 1 to 3.5, being able to incorporate both of these areas inside the stop loss, I think we're winning. That's a decent trade. So that's going to be my euro wash short. Yen. What else do we have? The Aussie yen. Euro yen. It's practically the same trade, isn't it? To be honest with you, no point taking two of them. Euro NZD. Yeah, I still like that one as well. So breaker structure, again, we want to be looking at the structural breakout area. This one. Yeah, for that 1 to 2 there. So Euro NZD short, I do like that. That makes sense. Good risk reward yield. Like that stop loss probably a little bit too healthy, so probably have that at around 179.80. That yields a 1 to 2.6. So very, very healthy return on that one, and it's still a really healthy stop loss. So that's the best of both worlds. Nothing on the GC yet. Pound Swiss. No, nothing on the pound Swiss yet. Pound against the yen. No, not another yen pair. Oh yeah, this really unfortunate case as well. Cable rallied up to the high up here, just subbed the TP and then came down at 5:15 on the Friday to stop us out. So that's a real shame on that one. However, cable is now trading at a relatively significant level of money. I don't really like drawing this zone in because it looks disgusting, but that is the one. So yeah, this one could be a nice mover soon. So breaker structure points in here. That's our BOS. Let me just put that down a little bit. There we go. Yep, so that's our BOS area. Now for this one, we have numerous technical risk factors. The main one being about this area, but the TP is really nice, well articulated here. And so you'd be looking at the trade idea long in cable, which is there, and here, 50% point there. So that's yielding a 1 to 2.1, and that's not too bad. So I quite like that one. Watch out for the TRF that sits in the middle there, but still relatively decent trade. NZD CAD, really incredible move today, guys. NZD CAD's probably been one of the front runners, to be honest, for the best of the best. The only problem is the damn thing did take off at about 4 o'clock in the morning. When we got to our chart, it was kind of too late anyway because we were moving into liquidity, but it has been really good. Now that we've got the breakout underneath this area, we are waiting for a retest on the 15-minute time frame, arguably something even higher. And then we do have a path of least resistance, and I repeat, an actual path of least resistance, because I appreciate all of the markets today are not inclusive of POLRs, apparently. A lot of noise in the way of the charts at the moment, but this is a very nice trading margin. Very nice indeed. Very clean, very clear. So wait for that retest to take place, wait for the structure to be broken, and then we can look to get involved. Now this is not a coincidence that it's turned at the sort of 52% point of the position of this trading margin. Not a coincidence. So on the way down, you may see another bounce from there, but I do not expect it to be a turning point. Remember, the market wants to travel to where the money is. And the money in recent history is here. Inflection point 1, 2, and 3. Then we get the almighty breakout, and even almightier sell-off from fundamentals. Then we get the breakout retest, the continuation. This is where it's going. I have no doubt at all. But we need to work out where our BOS is going to be and then go short. NZD Swiss. To be fair, guys, this has got legs as well. So possibly looking at that. That's the liquidity in there. It's not perfect. The decent area would have been here. It's not too far away from really where we are at the moment, but I think the best case for us now, if we want to take a long in this one, that area in there. I mean, this still works. We're not scrimping here. This still works. It's healthy. So target profit, stop loss, 50% point, and the continuation. I mean, this is not bad, guys. There's a 1 to 2.66. That's a decent trade. So yeah, I'm gonna get that one in. NZD JPY, no thank you. NZD dollar. Damn, this is another one. NZD. So we've got the floor there. We've got a potential ceiling at about here. I don't like that for the sake of the fake out here, but I believe that's caused from the news on the Friday. Oh no, maybe not. Not news event itself, but it did fake out, didn't it? However, I do trust in my level, so I'm not going to move it. That's what we've got to work with. I'm going to put my foot down with it. Break a structure point. Frankly, where it's trading at the moment, we have a TRF. That's at the 50% point, as it always is. So don't worry about that one necessarily. But this is the trade, guys. This is the trade. That's a 1 to 3.6. So I'm going to bring that down to a 1 to 3. Yeah, I don't want to get crazy with these risk-reward ratios. And to be honest with you, we've done pretty damn well so far this morning in sourcing very high return trades. I don't want to get carried away though. 1 to 3 is not the new average. And remember, the greater the risk reward, the greater the chance of failure. Basic math. So we got 21. I was going to say we've got 21 seconds to go. I'm not going to do that. Let's wait for this candlestick to close. We'll see where the next one opens up. And if you're interested, consider going for it. Yeah, I'm definitely happy with my 6160 zone. Okay. Do you know what, guys? I am going to go for it. Yeah, I am going to go for it. All right. 61,403. Oh wait, whoops. That's not. That's fine. 403. My broker must be out by a 0.03 on this one. Sorry guys, 2 seconds. I'm a bit anal when it comes to these things. Right, yeah. Okay, we'll see how that one does. NZD dollar long. Okay, cool. USD CAD. No, thank you. Dodgy area at the moment. USD China, my God, that looks absolutely tasty. Papaya and mango salad on the beach. That's what this looks like. Who likes papaya? Absolutely love papayas. Okay, we got a TRF. That's going to be about there. Median of the range. Actually, that TRF is just the top of the median, isn't it? So that's the bottom of the median. We've got a really, really nice breaker structure on this one. My God, are we going to be loading up with another? That is the entry criteria done. So then 15 minutes, bang, target. $3.23. I really am not liking one of these great risk reward ratios. Okay, so we got fake out back up there. That stop loss is still above it. Okay. 0.25s. Alrighty. God, it's going to be a busy week, I feel. USD yen. That one's already gotten going, so I'm not going to do anything on that one. And that's it. And then we come back down to the stocks. Wow, okay, we've made it through the entire list. So, it looks like there's a shed load going on at the moment, team. It really does, to be honest. There's lots and lots of potential trading opportunities that you guys can get stuck into. Obviously, we've taken a couple here together. The rest of them are 99% going to be breaker structures following their retests, which have already taken place. There is one trade, or maybe two, that we have to wait for a rejection of, then a break of structure and a BCR on two individual trades, but that's pretty much it. So I think that sums it up. I mean, that pretty much sums it up. I think it's a good place to start the week. We're looking like we're starting strong. We just have to hope that the volume is there and that we're not going to get what Michael's suggested and being a bit of a flip-flop week after having some market craziness take place last week. So hopefully the momentum continues. What I would say is last week I actually incurred quite a drawdown in terms of win-loss ratio in the trades. Fell from a 61 win-loss ratio down to a 59.5 and incurred 7 losses on the trot. I did write a little piece about it, very very short, in the general chat, because it's really good food for thought. I thought it's important to show people that you take on a lot of losses sometimes, and that's just part of the game. And I think it was because last week obviously had a really nice stock session on Friday, did a couple of wins in the NAS 100 following our plan from the breakout US market open session, and managed to pretty much recover. I think it was 0.4% loss that was left to be recovered, and that was it. All of those 7 trades amounted to 1.6% loss. And in the majority of that was covered in 2 wins in the stock markets. And they were just average trade. They were just 1 to 2s, I think 1 to 2.1s or something. So if you haven't seen that already, it's not a lot of writing. It's not a lot to write, but it's good to see the data because there's pictures of the data there. And it's just some good food for thought for those of you out there who maybe struggle a little bit with incurring losses and stuff, and how important it is just to continue following the process no matter what, because the process at the end of the day will make you money. So Anyway, I'll stop my tangent there, guys. I'm going to wish you a really good day today. Good luck this afternoon. It is 20 past 2. You have 9 minutes to go until the market opens. So grab yourselves a coffee or whatever you need. And I hope it goes well. So take care, team. Have a good one. And I'll see you then. Cheers. Bye-bye.